Good morning, ladies and gentlemen. Volkswagen AG would like to welcome you to this conference call on the first quarter figures published by the company. Please note that this conference call is being recorded. I would now like to hand over to Nicole Mumson, Head of Group Communications. Thank you.
Good morning, everybody, and welcome to the first quarter earnings call of the Volkswagen Group. Here with me today are our CEO, Herbert Diess, and for the first time also our CFO, Arno Antlitz, who just started in April, this first quarterly earnings call. And we also have Christian Dahlheim, our Head of Sales, on the line for Q&A later. Due to the positive feedback from the annual earnings press conference and the Power Day, as you probably have realized, we are holding this also in English. You can ask your questions in either English or German later on. Answers will be given in English. And with that, I'll hand over to Herbert Diess. Herbert.
Yeah, good morning, everybody. Welcome to our Q1 call. It is the first earnings call with our new CFO, Arno Antlitz. I'm very pleased that Arno is now part of the Group Executive Board. With his strategic approach, he will play a crucial role in our transformation in the coming years. Together, we will ensure that we set the right priorities for the next phase of the transformation. More on this later. Overall, Volkswagen had a strong start in 21. Our operational performance was significantly above the first quarter last year, which had already been burdened by the first wave of the COVID-19 pandemic. We managed the global semiconductor supply shortage by prioritizing and shifting capacities. Our task force fought for every single car to ensure that we are getting the necessary semiconductors. In the first quarter, our BEV ramp-up gained further momentum, and we built a foundation to tap into future profit pools, be it battery and charging or software. While we foresee the semiconductor shortage to substantially burden earnings in the second quarter, we will do everything to offset a significant amount of the lost cars in the second half of the year. I think we could say that we managed the general shortage of semiconductors quite well, but the incidents in the US and in Japan will hurt us definitely. Given the positive momentum from the first quarter, high volumes, strong product mix, and favorable pricing, as well as progress on the fixed cost side, we updated our 21 guidance by 0.5 percentage point and now expect an operating margin of 5.5 to 7% for the group. In Q1, our group delivered 2.4 million vehicles to customers worldwide, a plus of around 21% compared to last year. In total, our volume brands have increased deliveries by around 18%. Our Volkswagen passenger car business delivered 25% more vehicles thanks to the market recovery in China. Skoda grew models Kamiq and Karoq. With its strong focus on Southern Europe, SEAT deliveries fell by 3.7%. However, we see good sales momentum with the new Cupra models. We delivered 10,000 Cupra Formentors in the first quarter alone. Our premium brands grew by 31%. Audi had its best first quarter in China ever and grew deliveries in the US more than 30%. Porsche's strong performance in China and the US drove growth of 36% in our sports and luxury segment. The truck and bus division reached around 60,000 deliveries and an increase of 31%. We also gained market shares in most of our core regions. In North America, we demonstrated a strong comeback story with deliveries rising 16.1%. In March alone, deliveries grew 80% compared to the prior year. We see high demand for the Atlas and expect similar momentum from the Taos. In the South American region, our deliveries rose 6.5%, while the market remained on the low prior year's level. This was particularly driven by the Nivus, an SUV that will come to Europe later this year. In Brazil, we expect to reach the break-even point in 21 following a clear turnaround strategy. Coming to Asia Pacific, based on the strong performance in China, we outperformed market growth by more than 15 percentage points, with the Viloran, we introduced a comfortable luxury 7-seater serving family and business needs. In Central and Eastern Europe, we increased our deliveries by 5%, while the market shrunk by around 3%. Looking at Western Europe, deliveries were impacted by COVID-related lockdown. As promised, we will report our BEV sales on a quarterly basis. We delivered 60,000 BEVs to customers, 78% more than in Q1 last year, and around 73,000 plug-in hybrids, a plus of 178%. In Western Europe, order intake amounted to 65,000, bringing the order backlog to more than 100,000 BEVs at the end of the quarter. Across the group, we already ranked number 1 with our BEV sales in Europe. Meanwhile, our global BEV portfolio is growing rapidly. The Volkswagen brand introduced the ID.4 in China and in the US, further accelerating its electrification push. Other new e-models include the ID.4 GTX, the ID.5, and the ID.6, as well as Škoda's Enyaq, Audi's Q4 e-tron, Porsche's Taycan Cross Turismo, and the Cupra Born, all coming to market this year. In total, we expect to reach 1 million deliveries of e-models, BEV and PHEV combined, in 21. Thus, we are fully on track to meet our CO2 targets in the EU. Over the next 10 years, Volkswagen will manage the largest transformation in its history to become a globally leading, climate-neutral, software-driven mobility group. As part of the transformation, we have further consolidated our smaller luxury brands. Bentley, Lamborghini, and Ducati will be managed by Audi to help leverage synergies in the luxury segment. Now under the roof of Porsche, Bugatti plans to join forces with Rimac. Our future profit pools will center around platforms. Our hardware, software, battery and charging, as well as mobility and services platforms. In the first quarter, we continued to roll out our MEB platform with a production capacity of already 1 million cars globally. On March 26, we presented our new software brand, CARIAD, to more than 4,000 employees. CARIAD will allow us to turn the car into a smart companion which will communicate 24/7 with customers and provide updates and new digital features even years later. By further integrating the people and software capabilities of previous acquisitions, we are continuing to increase our in-house software expertise. I just visited our new CARIAD colleagues from Hella Aglaia in Berlin, a top-motivated team, state-of-the-art technology. Now 200 experts work in the field of perception, situation recognition, and object classification. CARIAD has also set up a team to build up expertise in the definition of semiconductors, a core competence as cars are becoming Internet devices. Another important milestone was the bundling of our battery and charging activities under the leadership of Thomas Schmal. At our Power Day in mid-March, he and his team presented our roadmap for batteries and charging up to 2030. One unified cell approach, production in Europe, further partnerships with BP, Iberdrola, Enel to extend our charging infrastructure. At the same time, the transformation of our components business has proven to be an industry blueprint to make jobs in Germany and Europe future-proof. In the first quarter, we signed a joint venture agreement with Brose to establish a leading global seat supplier together with our CTEC business. Finally, we are building system skills to offer mobility as a service to our customers for every situation in life. Together with Argo AI, we are pursuing the driverless vehicle for mobility services. In the first quarter, we got green light for test operations with our concept car ID. Buzz, laying the foundation for bringing the Argo system into driverless series operation by 2025. As a group leadership team, we achieved good earnings in the first quarter 2021. Our semiconductor task force has played a big role in keeping our production up and running. We are pleased to see that the capital markets are increasingly recognizing our potential as drivers of tomorrow's mobility world. In 2021, we will further accelerate our transformation, backed by a strong operational performance and following our platform approach, which will be a cornerstone of our strategy 2030. With that, I hand over to Arno Antlitz, who will give you a deeper insight into our financials.
Well, thank you very much. Ladies and gentlemen, we are still living in unprecedented times. COVID continues to have an impact on our society, on ourselves, and on our business. At the same time, the shortage of semiconductors had put added pressure on the whole industry. Against that backdrop, we delivered a solid first quarter. Sales revenue increased to 62.4 billion euros. Operating profit came in 4.8 billion euros. That is 3.9 billion euros above last year. This corresponds to a strong operating margin of 7.7%. Profit before tax came in at 4.5 billion euros, while profit after tax was 3.4 billion euros. This result was mostly driven by strong passenger car business, in particular premium, which benefited from market recovery and strong product momentum. Overall, we showed strong mix and pricing, as well as fixed cost discipline. Our financial services business also performed strongly. As you're aware, we cannot speak about the key drivers of our business without mentioning China. As part of the financial result, the equity result came in at around 0.5 billion euros, mainly delivered by our Chinese joint ventures. We have a clear focus on cash flow generation, even more in our transformation. Our reported net cash flow came in strong at 4.7 billion euros. Clean cash flow before M&A and diesel amounted to 5.5 billion euros, and net liquidity rose to 29.7 billion euros. This is an increase of 2.9 billion versus year-end 2020. These results clearly demonstrate our strong operating performance, show our focus on working capital, and prove the robustness of our business. Coming to the performance of our divisions. Within the automotive division, passenger cars delivered 3.8 billion euros operating result, a strong 8.5% operating margin. Commercial vehicles came in at 0.1 billion euros. This result was burdened by substantial restructuring costs at MAN. Power engineering came in at a loss of around 40 million euros. The financial service division again proved as a strong pillar and contributed a strong 1 billion euro result. Coming to our brand group performance. Within the volume group, brand Volkswagen made significant progress and came in with an operating margin of 4.5%, mainly driven by strong recovery in the regions North America and South America. Skoda delivered a strong operating margin of 8.9%. Within the premium group, Audi continued the strong product and earnings momentum from last year and delivered a rock-solid first quarter with a double-digit operating margin of 10% and an extremely strong cash flow. Bentley also came in with double-digit operating margin. In the sport luxury group, Porsche very consistently delivered an impressive 16.7% operating margin. Looking at the commercial vehicles business in more detail, you get a mixed picture. Scania delivered a 12% operating margin. The underlying business of MAN had a small positive result, which was negatively impacted by restructuring costs of 0.4 billion euros. Q1 has been a decent quarter. We have managed COVID and the semiconductor restrictions well so far. However, we still have limited overall visibility on the financial impact of the semiconductor shortages. While we expect a more difficult Q2, we still see a good chance to recover a significant amount of the vehicles lost in the second half of the year. This development, together with our strong product momentum and our ambitions on the cost side, gives us enough confidence to raise our group operating margin guidance to the range of 5.5 to 7%. And we expect the net reported cash flow for the automotive division before a Navistar transaction to come in significantly above 2020 figure. Ladies and gentlemen, we are clearly ambitious in our transformation. Combined with the shift in resource allocation towards electric, software, and services, we will push to transform this company to a leading tech and mobility player in our industry. Cost and investment discipline are key to finance our strategy. Today, and also in the future, I would like to update you on our progress by outlining some proof points in our strategy. Focusing on our BEV ramp-up. We are scaling up our BEV volume. The proportion of vehicles on MEB platform is already over 30% of our total BEVs. Our deliveries are nearly 80% above the prior year, and tactical, especially on the MEB, are very low. Our over-the-air functionality will have regular updates available in the coming months. Software. With CARIAD, we are fully committed to delivering a leading automotive software stack in the industry, which is an integral part of our strategy and a key differentiator for the future of our industry. Currently, the performance of CARIAD is shown within the other line of our group P&L. I would like to give you a more transparency about the planned business case. CARIAD already has around 4,000 employees, and in Q1, CARIAD spent around 500 million euros on R&D. The business case foresees a significant investment phase. The R&D cost for software stacks in the brand will fully shift to CARIAD. In the income phase, CARIAD will receive licenses paid by the brands for software use. This already started with the rollout of the ID family architecture. R&D and CapEx. We have very ambitious plans for the transformation that are required to safeguard our future. For that reason, we have guided for R&D around 7%. While this is still above our strategic target of 6%, it is necessary. It's a necessary reflection of our execution of our best strategy and of building up our software competence. On the other side, we will continue our strict CapEx discipline approach. We will increase our efforts to capture synergies between the brands and also to compensate for higher R&D costs. In Q1, CapEx was not only in percentage terms well below 2020 figure, the absolute amount was also below the prior year. Coming to fixed cost, we are convinced that a lower fixed cost base is necessary to improve our competitive position and to finance our future. Therefore, we want to reduce fixed costs without R&D and CapEx until 2023 by 5% versus a defined base in 2020. Taking the year 2019 as a more normalized base, the group-wide program target implies a reduction of around 10%. We managed to decrease the cost base under this program by around 6% versus 2019 so far. There's still way to go to achieve the 10%, but we see this as a promising start. Ladies and gentlemen, we have a clear plan. We strive to even better position our fascinating brands in the future, draw synergies where possible, and work hard on cost and efficiency for the good of our customers and stakeholders. At the same time, we will transform ourselves into a technology and mobility service group. To achieve this goal, we will scale up our BEV platform, invest in battery and energy solutions. We intend to develop a leading automotive software stack and continue to invest in autonomous driving and mobility services. We intend to do this based on integrity and on our values and with as much accountability, transparency, and measurability as possible. Thank you very much.
Thank you, Arno. Thank you, Herbert. We are now ready to take your questions. And the first question.
Thank you. If you would like to ask a question, please press *1 on your telephone keypad. Please ensure the mute function on your phone is switched off to allow your signal to reach our equipment. If you find your question has been answered, you may remove yourself from the queue by pressing *2. Again, please press *1 to ask a question.
Yeah, now we have a first question. First question from Christoph Rawald at Bloomberg. Christoph, good morning.
Yes, good morning from Frankfurt. Thanks for taking my question. I've got two, actually. Firstly, there has been some concern related to the performance of the SAIC joint venture in the critical Chinese market. Margins seem to be under quite some pressure there. Can you maybe comment on the issues over there and how you intend to fix them? And secondly, you've mapped out a very significant investment, obviously, globally on electric cars, CO2 reduction software, battery factories, etc. Will you be able to finance all these projects from the group's existing cash flow, or will the option for a Porsche IPO be a consideration in coming months? And if not, what other options are on the table for you to raise funds if needed, given that your shareholder structure seems to limit the ability to sell new shares? Thank you.
First of all, SAIC's performance, yes, this is a bit of a concern for us. I'm basically overseeing changes in SAIC. We have made movements in the team. So we have new sales director there from our Chinese joint venture partner, and we expect from now on further product momentum in SAIC. We have to consider that also in former years, SAIC was always much better performing than our northern joint venture because of product lineup, no product portfolio. Meanwhile, our northern joint venture has gained a lot of momentum with introducing SUVs, very modern cars, so we have more internal competition, which we have to get into a better balance. But we are confident that now with the launches of our electric vehicles, a new focus on the Volkswagen brand, that we will recover. Also, SAIC was our probably most hit by the shortage of semiconductors in the group. So that is why we see a dip. And there were some also write-downs which we had to make for some of the assets from former projects. So I think we should see a recovery for SAIC within the next quarters. The second question was investment, BEV batteries financing. Yes, we think we have strong cash flow in the first quarter. We are now under the leadership of Arno, have a even stronger focus on the cash flows and generating the cash flows to finance our transition is our key target. And so yes, we are certain that we can finance the transition through internal cash flows.
Thank you.
Sorry, the second question comes from Joe Miller from the Financial Times. Joe?
Hi, good morning. Thanks for taking my question. I just have a couple of quick questions. I noticed you said that you may be able to recover some of the vehicles lost due to the semiconductor crisis. I wondered if you could quantify that somehow. I know it's a bit early to tell, but how many vehicles are you still expecting to come out with in a net loss at the end of the year? And can you confirm that electric vehicles, or those based on the MEB platform at least, are still unaffected by the shortages? And also, just to follow up to what Christoph asked there about the Porsche IPO, I noticed you didn't mention anything about that, but it just seems to me there are different noises coming out of Porsche, and Mr. Diess, you yourself have said it's sort of off the table. I just wondered if you could sort of clarify that for those of us who are a little bit confused. Is a Porsche IPO definitely off the table this year?
Recovery of semiconductor vehicles, I think it's too early to give up. We will see some losses in the next quarter, in second quarter. We have lost about 100,000 cars in the first against our planning, but still delivered, I think, good results. And so we are managing, and we're still tasking our supply chain people to recover the losses of quarter two, which we expect. So it's too early to quantify how we're going to really end up. BEVs are mostly unaffected so far by semiconductors, but still we are for sure ramping up batteries, and I can't guarantee that we don't have any shortfalls in BEVs, but so far BEVs are unaffected, and hopefully we get that through the whole year. Your last point, I only can repeat that we will finance the transition from our internal cash flows, which are really strong.
Thank you.
Thank you. And then we have Christian Hetzner from Fortune.
Yes, good morning, and many thanks for the chance to ask a couple of questions. I was curious about a couple of comments you had just made on your battery electric vehicle rollout. First off, could you then confirm that the 59,000 we saw in Q1 should actually ramp up then in Q2, or do you expect that to, as a result of the semiconductor shortage, to decline? Could you also talk about, you mentioned tactical incentives were low. Actually, I kind of expected that they would be virtually zero. These are brand new cars launching into a segment where there seems to be a lot of demand, so perhaps you could indicate there have been some reports that you were incentivizing quite heavily the sale of ID3s in the UK market. I was wondering if you could talk about that. And then as far as Tesla is concerned, they seem to be a big fan of cryptocurrencies. I know Volkswagen every once in a while likes to borrow a page from Tesla's strategy. Is that in any way, shape, or form something that you would consider, either opening up Volkswagen to the use of Bitcoin or other cryptocurrencies for the payment of various services or cars, or as a possible investment opportunity given the very low rates for cash holdings? Thank you.
Yes, we will see in Q2 a strong ramp up of our BEV production. Our plants are gearing up. China is launching the cars. We have market introductions in the first. We have done market introductions, so we will see a strong growth in our BEV sales, and we have good order bank of about 100,000 BEVs, so we should see significant growth. Referring to the tacticals and cryptocurrency, I hand over to Arno.
Yeah, no, we have currently no plans to use cryptocurrencies or invest in cryptocurrencies.
Regarding incentives?
Yeah, and incentives are really very low. We are very pleased with the tacticals in BEV, so we can confirm that pricing is strong in these cars.
Thank you.
Thank you. Then we have Frank Johansson from Automobilwoche. Sorry, Frank, we can't hear you. I'm just going to take the next one, and then we can maybe come back to Frank. We have Stefan Menze from Handelsblatt.
Hello, good morning to Wolfsburg. Can you hear me? Because I had some problems with my telephone. I've had to switch over to my mobile. Can you hear me?
We hear you very well, Herr Metzler.
Okay. Good morning. I just have one question concerning your reporting. In your reporting, you don't distinguish anymore concerning the operative results concerning before and after special items. Does it mean that diesel is over for you?
Mr. Metzler, we had no bookings on that we had to basically book under special items. So this is the reason why we didn't differentiate on the operating result before and after special items. We can rule out for the future, but for the time being, we have no special items booked. On the other hand, they are still on the cash flow side. There are still outpayments referred to diesel, and this will basically about 1.5 billion this year. But they're accrued already and in our books. So.
Okay, that's fine. Thanks a lot.
Thanks, Stefan. And then we have Bill Boston from the Wall Street Journal asking the next question.
Hi, thank you very much for taking my call. I would like to get a little more detail about production. I have two questions. One is if you could give a sense of, comparing this quarter to 2019 rather than the devastating first quarter of 2020, basically looking at it in terms of a normal year, how do you feel the performance is? How close are you to getting back up to normal production activities? And also, in the report, you say that the share of production in Germany compared to its worldwide share of production has declined. And I was wondering if that has to do with the chip shortage. Is Germany being impacted more than other parts of the world? And the other parts of the world, I'm assuming, is largely China. And, why is China doing better in terms of managing the chip shortage than Europe and Germany? Thank you.
So this is a bit complex. First of all, comparing to 2019, we are in relatively good shape. Turnover is higher than in 2019. Production volumes are a little bit lower, but we have much better mix. And also cash flow wise, we are already better than 2019. So that's good. So we managed well. The shift of production towards China is because China is just recovering much faster. So we have a huge market growth in China already for the first a couple of months. We have a high market share in China. This is why production is shifting. And also we have a ramp up in Latin America in our Mexican plant for the US. So that shifts a little bit of production out of China. And the European market is in decline in the first quarter. And we are basically declining as the market is declining in Europe. The production shortages of semiconductors are we face all over the world, mostly in Europe, yes, because we have there a huge variety of premium products and many cars are affected, mostly minor volumes. But China SAIC, I mentioned China SAIC, they are as much affected as Europe. We're trying to prioritize the semiconductor supply according to our margins, and that is why you might see some shifts. Basically, we're using the same set of semiconductors and the same suppliers because it's all MQB, it's all the platform or MLB from the Audi platform.
Okay, second try. We've got Frank Johansen back from Automobilwoche. Do you want to give it another try?
Yes, hello. Can you hear me now? Hello?
Very well, hello? Thank you.
Okay, yes, sorry, I had some trouble with my phone line. So actually I have two questions. The first one, Mr. Dies, you mentioned Bugatti was handed over to Porsche and will go into a new construction with Rimac. Can you give us any more details on this? What's the timetable? How will it work? And will there be a closer collaboration with Rimac in future? And the second one, you're looking for a new IT board member, a female one, should be installed in summer this year. Yesterday we learned that Ms. Suda will not become your candidate. So can you say why and how's the timetable? Do we have further candidates? Are you still looking forward to get the post, get someone by end of June? Thank you.
Okay, first one, Bugatti. I think it makes much more sense that Porsche is steering Bugatti through the next phase of probably electrification. There are much more synergies when it comes to carbon fiber, chassis parts, and also high-performance engines. There are very little synergies with the Wolfsburg development where Ducati currently is based. So I think that's a relevant move. Also complexity. I think Porsche can handle those customers much better. It's very few customers. So I think it's just one more move to reduce complexity on group level. Porsche has a plan to partner with Rimac, and I would wait for Porsche's comments on that theme, how it's proceeding. I think it's a good plan, and Porsche will report on the next steps. IT board member, yes, Frau Suda was not accepted and chosen by the supervisory board. At the end, those decisions are with the supervisory board. I had very positive meetings with her. She was very interested in joining. At the end, this is a decision of the supervisory board. I think it's not really mission critical for the moment because, as you know, our main focus on software and IT is with CARIAD. The open job cards there are much more of a concern for me than, let's say, the IT on group level. IT on group level is basically company IT. It's reporting into Arno. We have with Frau Hof a very competent first-line report into Arno's, and I'm sure that Arno will guide the IT, company IT through the next phase. So it's not really I would say, mission-critical assignment.
Christoph Steitz from Reuters.
Ich glaube, dass Arno dort auch während der nächsten Phase aktiv sein kann. Das ist, also würde ich nicht sagen, dass es missionskritisch für uns ist. Gut, dann haben
Did we have Christoph Steitz from Reuters asking a question?
Hello, can you hear me?
Yes, now we can hear you. Sorry, Christoph.
Perfect. Thank you very much. Sorry about that. There seems to be some technical problems here. I want to ask a few questions on chips. I'm sorry if they have been asked already. I'm wondering, have you made any progress regarding securing direct supply agreements with chip makers to, as a way to kind of soften the impact from the ongoing shortage? The reason I'm asking is because it seems to actually help car makers' profitability, also helped by stronger demand for luxury cars. So I'm wondering, how do you think about this at the moment? And thank you very much. If you could just provide a bit more clarity on that.
Yeah, I try. So semiconductors are becoming more relevant for our industry year by year, basically. As the car really becomes an internet device, you can imagine, and the amount of semiconductors we have in the car is growing every year. And it's also to differentiate the cars, to have the right semiconductors, the right semiconductor design is really critical for the performance, connectivity of the car, and mostly for autonomous driving. So we get into a more direct contact with semiconductor manufacturers on the design side. That's a continuous process, and we are for sure in that crisis mode talking directly to I would say the first tiers, then the second tiers of the semiconductors, like say the NXPs, Infineons, and even to the foundries, which at the end where the bottleneck happens at TSMC and the other foundries of the world. So this dialogue is established. We are directly contacting, and it will increase over the years. The current crisis, I would differentiate two aspects. Now, what we see in next quarter is basically our two incidents, which is failure of 2 or 3 semiconductor plants in the US because of winter storms, and one fire which broke out in a Renesas plant. 2 of those plants, of those 4 plants, were dedicated basically 100% to automotive, which is what we currently are seeing on the horizon, and that's going to hurt because as the pipeline runs empty, now that's going to hurt the industry, and you hear the figures from all over the world. The rest is basically a general shortage of semiconductors because of the fast growth of the Internet of Things, IoT, which is mostly using the same technology, 54 nanometer technology, as the automotive industry, and there we have a constraint. We are working on that with the big suppliers, with Infineon, Intel, all around the world, to make sure that we get more capacity for the next years to come. But there is investment required. Investment in those kind of technology is not the general investment which is currently executed. No, most of the investment in semiconductors goes into 9 nanometer, 5 nanometer processes. So we have to make sure that we switch faster from, let's say, the old technologies into new technologies. A comprehensive plan which we are working out now with all the semiconductor manufacturers to make sure that we get our future growth expectations, let's say, guaranteed with the semiconductor supply. But it's hard work, and it will take time. I think we have to differentiate those things, no?
Can I ask a follow-up?
Was there a follow-up question?
You dropped quite an interesting remark about autonomous or chips for autonomous cars, that you want to control the design, and I was just wondering, how advanced are you in this field? Are you already talking to designers about this, chip companies, to get into this? Just want to know how advanced you are in this regard.
No, it's early days.
Okay.
Okay, all right. We have Marco Engelmann from DPR-AFX on the line. Marco?
Yeah, good morning, everyone. Two questions, if I may. Firstly, just in regards to the raised earnings guidance, analysts seem to be even more optimistic about the margin for the year than you are now. You yourself mentioned cautiousness around the chip situation and pandemic. So what is the big picture here? Are you still holding back some research regarding earnings? If the situation clears up, or are financial experts simply too optimistic into the year? And my second question would be, there's much talk about chips, but what about steel? Steel companies are right now reporting about high demand and high prices, or rising prices, while capacities are still low. Is there a new problem arising on the horizon for the auto industry? Thanks.
We feel the pressure, but Arno, yeah, I think we feel a lot of pressure from let's say on material side. Now steel is one thing, but even more concerning are probably precious metals. Some of the precious metals, aluminum is on the increase. We will try to dampen that down. We have some of the materials, we have forwards, we have hedges, and we have some long-term contracts, but we will see probably over the next months an increase in raw materials. We already suffering that, or experience that in Latin America. So wherever possible, we will try to pass it also through to our customers, and we will make sure that the increases will be as low as possible with our purchasing power. So this is something we have to handle. That happens in every, let's say, swing, when the industry is back into boom mode. We have to manage it.
And in terms of margin guidance, as I said before, we have really a strong product momentum. We see a strong mix, pricing discipline. We make good progress on the cost side, draw synergies where possible. But on the other hand, there's still not 100% visibility on the semiconductor topic, specifically in Q2, as Herbert mentioned. So we think this is a good step to increase our guidance to 7% or 5 to 7%, and so we will review the guidance in the end of the second quarter. But for the time being, we think it's a good step in the right direction.
Okay, thank you very much.
Thank you. And then we have another follow-up question from Christian Hetzner from Fortune. Christian.
Yes, many thanks. I just wanted to touch briefly upon what Marco was asking about, and you, in terms of cost pressures, especially since the Federal Reserve has sort of talked about inflation or inflationary pressures being transitory. But from what you're telling us, it sounds like you see this lasting potentially longer. And then just to touch back on the issue of semiconductors, I was curious, do you see any sort of long-term, changes in your just-in-time production strategy as a result of this shortage, or is this just something where you're going to sort of sit tight and wait it out until it goes without any sort of fundamental changes to how you purchase and store chips? And maybe sort of connected to that, could you explain why SAIC is more affected than FAW in terms of semiconductor shortage? Thank you.
It's probably I start. Will that change our just-in-time production strategy? In general, not. No, because we have, when it comes to supply chain, still managing inventories is crucial. But yes, we will change our supply chains with the semiconductors. Now we will be better prepared for crises, and we will have some stocks between the semiconductor plants and our first tiers at least, because to compare the loss of or the margin loss or the cost of stocking some of the semiconductors to the loss of a car. With a high margin car, or it could be a high margin car with 5 or 10,000 or 15,000 euros. It doesn't make sense. So yes, we will change our sourcing strategy for semiconductors. Why is China South a little bit more hurt than China North? It has to do with the product lineup they are having. This is why we see a bigger effect in the South. And Arno, probably you could.
Yeah, in terms of the cost pressure, of course, we try to compensate as much of the cost pressure we see. In terms of inflation, what we typically do, we pass on inflation in regions where we have really high inflations, like Brazil, Russia, and so on. And so we are quite confident that we can cope with the cost pressure throughout the year. Our purchasing teams are doing a good job here. And as I said before, we try to compensate as much as possible.
I was just wondering, though, could you comment on whether or not you think this is transitory?
It's we will try to drive costs down, and it's very hard to predict. I think the demand worldwide will be on the increase after COVID. We see that already in the regions which are basically through. America, we have very high demand. And in China as well. So as the world gets through COVID, I think there will be strong car demand, probably more than supply. That it will allow for, let's say, also probably improve our margins, and that will also push raw material prices. When will that be? Let's say, getting down again, probably with a shift to EVs, we will see in some materials changes, but it's very hard to predict, and it's I would say it's a process which will take probably a year or two.
Many thanks. I appreciate it. Thank you.
Thank you. And then we have another question from Joe Miller, the FT.
Yes, thank you. Sorry, if you give me just a quick follow-up. Mr. Diess, you mentioned talking to NXP and Infineon and TSMC, etc. I just wondered whether any of those discussions are responding to the calls from the semiconductor industry for longer-term contracts from OEMs to basically insulate them from the boom and bust cycle or short-term cycles of the auto industry. Is that something that is a part of those discussions? Are you considering doing far longer-term chip contracts directly with either sort of tier ones or semiconductor manufacturers themselves?
Not necessarily directly, but yes, we ask or urge our first years to get into long-term contracts with the foundries and semiconductor manufacturers. Yes, definitely.
Thank you.
And then we have another follow-up question from Stefan Menzel, Handelsblatt.
Yeah, thanks again for taking my question. At the very end of your press release, you say that you expect higher effects from M&A activities throughout the year. I'm just wondering what you mean by that. Could it be the sale of NYSE, for instance?
I mean, no, there are smaller M&A effects we expect, and of course, you're aware that we announced the Navitar transaction, which will be closed in the midst of the year, and so these are basically the main topic. And Herbert, I think you want to mention, and we have also the Stack and Goshen. So,
okay, thanks.
Okay, I don't see any further questions. Operator, do you want to ask again whether there are any questions?
As a reminder, to ask a question, please press star 1.
So here we come. 2 more questions. One from Christoph Steitz, Reuters. Christoph.
Regarding your battery plants, you want to build 6 factories, and you've pretty much let the market know where 4 of them could be built. What about the last 2? Is it still too early to talk about them? Is Germany on your radar? I mean, it's still a couple of years out, but just wondering how you think about that. Thank you very much.
It's far too early. We've seen interest from many European states to attract our investment. It's a very future-proof investment, but the footprint has to follow basically our manufacturing footprint, which is strong in Southern Europe, in Spain, and in Eastern Europe, Czech Republic, Poland. Those are probably countries we explore first, but it's too early to decide on the next locations, and it will be a competition.
Okay, thank you.
Then we have another question from Christian from Fortune.
Many thanks. Sorry, just because there's extra time, I just wanted to quickly chuck this in. As far as CO2 regulatory credits are concerned, you had said that this year you don't expect to pay any. I imagine also, internally to maybe other car makers, you're already in a pool in Europe with the SAIC, for example. Could you just confirm no payments expected? Yesterday, Stellantis said that they won't make any payments to Tesla. There's also been reports that you are making payments to Tesla in China. Could you comment on whether or not that's the case and how high they might be, and whether you expect to make any payments for this year for other jurisdictions outside of Europe? Thank you.
In Europe, we are confident that we will comply with the fleet targets. In other regions, there are some minor deals, or let's say sales and purchasing for certificates in China and also in the US, but they are declining with the ramp up of our EV strategy, and they should come down to 0 within the next 2 or 3 years.
Fantastic. Many thanks.
All right. I don't see any more questions. I think there were a few follow-up questions. So if there is nothing else, otherwise we'll be available all day, Christoph, myself, and the whole team. Thank you for taking the time. I hope you have a good day and hear you next time. Thank you.
Yep.
Thank you. That will conclude today's conference call. Thank you for your participation, ladies and gentlemen. You may now disconnect.